Ladies and gentlemen, welcome. Thank you for being here today. Because what we're about to explore is more than a financial topic, it is a shift in the very architecture of wealth. We are stepping into a world where value moves faster than ever. Where assets no longer need to be physical. And where digital ownership is rewriting the rules of prosperity. Today, I invite you on a journey, a deep dive into the fascinating universe of next-generation assets. We're going to look beyond traditional investments, beyond the familiar comfort zone of stocks, bonds, gold, and real estate. Because a new class of assets has arrived. One built on blockchain, artificial intelligence, virtual economies, tokenization, and digital creativity. And this new class is reshaping our financial future right in front of our eyes. Why new assets emerge? 1. A shift in mindset. Let me begin with a powerful thought from Robert Kiyosaki, the author of Rich Dad, Poor Dad. He often says that the rich don't work for money, they build assets. But what he couldn't have fully anticipated 2 decades ago is that the definition of asset itself would undergo a dramatic transformation. For Gen Z and millennials, digital natives, money is not simply paper. And assets are not limited to what you can hold in your hand. They grew up watching technology reshape every aspect of life. So they asked a bold question. If my identity is digital, my entertainment is digital, my social interactions are digital, why shouldn't my wealth also be digital? That question changed everything. 2. Technology became the great accelerator. Bill Gates once said, "We overestimate what can happen in 2 years, and underestimate what can happen in 10. Look around, in the last 10 years. Blockchain made digital ownership possible. AI began creating assets. VR and AR formed virtual worlds. Tokenization turned everything into a tradable unit. The speed of innovation compressed decades of progress into a few years. And anytime technology accelerates, new forms of wealth are born." 3. Inflation and the decline of traditional money. Ray Dalio, one of the most respected macro investors in the world, reminds us that paper currencies lose value over time, in every economic cycle. When governments print more money, cash loses purchasing power. Traditional assets become more expensive. And younger generations look for alternative stores of value. Crypto, NFTs, tokenized assets, they didn't become popular by accident. They appeared because people were looking for a better answer. What are next-generation assets? Let's explore the landscape of these emerging opportunities. 1. Cryptocurrencies. Cryptocurrencies are not just digital money. They are a financial system without borders, running on technology instead of trust in institutions. Bitcoin, the first and largest, is often called digital gold. Not because it shines, but because it is limited in supply. It is decentralized, and it cannot be manipulated by any government or bank. Morgan Housel, in The Psychology of Money, explains that people make financial decisions based on the emotional imprint of their generation. Gen Z grew up witnessing economic crisis, inflation, and inequality. It makes perfect sense that they would gravitate toward a system that feels more transparent and fair. 2. NFTs, digital ownership. NFTs are not a trend. They are a technology that allows unique digital ownership. Yes, the art boom of 2021 was chaotic. Prices skyrocketed and crashed. But the underlying concept is here to stay. NFTs are now used in ticketing, identity verification, gaming, licensing, Metaverse assets, digital collectibles, intellectual property. The technology didn't fail. The hype failed, and that is a very different story. 3. Tokenized real estate. Imagine owning real estate, but not needing $100 to start. Imagine owning a fraction of a building in New York, Singapore, or Dubai, all through blockchain tokens. This is the future of real estate. Borderless, divisible, liquid, accessible. In the next decade, tokenization will turn billions, even trillions of dollars in real estate into global investment opportunities. 4. AI-generated assets. Artificial intelligence is creating a new asset class entirely. AI models, datasets, digital characters, voice clones, automated content engines, algorithmic businesses. Once created, these assets can produce value 24/7, without sleep, without breaks, and without geographic limits. This is not science fiction. It is the new economy of intellectual automation. 5. The Metaverse economy. The Metaverse is not just a game. It is a new economic layer where people work, businesses operate, assets exist, societies evolve. Think of it like the early internet. People laughed at websites in 1997. Today we run our lives on them. The Metaverse will repeat that same pattern, but faster. Why these assets matter? 1. Wealth is growing faster than ever. In the past, building wealth required decades. Saving slowly. Accumulating assets. Climbing the corporate ladder. Today, digital assets can scale instantly. Spread globally. Create income streams overnight. A single NFT collection can finance a startup. A single AI model can build a business. A single crypto investment can outperform 10 years of savings. The rules have changed dramatically. 2. Decentralization equals freedom. Ray Dalio warns that any system too centralized is vulnerable. Blockchain provides the opposite. Transparency. Personal control. Independence. Resistance to censorship. For younger generations, decentralization is not a luxury, it is a necessity. 3. Low barriers to entry. This is one of the most important points. You no longer need $50 to buy stocks, $100 for real estate, a perfect resume, a corporate job. With as little as $5, anyone can buy crypto, invest in tokens, create NFTs, build AI assets, participate in digital economies. Wealth has never been more democratized. Opportunities and risks. 1. Opportunities. High growth potential. Global liquidity. Digital ownership. Passive income from AI and blockchain. No geographic barriers. 2. Risks. Extreme volatility. Scams and fraudulent projects. Regulatory uncertainty. Rapid technological disruption. Security vulnerabilities. Warren Buffett's advice is timeless. Risk comes from not knowing what you're doing. So let's fix that. How to master NextGenAssets. 1. Invest in knowledge. Napoleon Hill, in Think and Grow Rich, said, "All wealth begins with ideas." And in this new era, blockchain is an idea. AI is an idea. Tokenization is an idea. If you don't understand these ideas, you cannot benefit from them. 2. Diversify wisely. Ray Dalio recommends holding a balanced basket of assets, at least 15 types, to minimize risk. Your modern portfolio could include crypto, equities, tokenized real estate, AI intellectual property, safe traditional assets. The goal is not to chase hype, but to build resilience. 3. Control your behavior. Morgan Housel says, "Your behavior can sabotage you more than your investments." So apply these rules. Never invest emotionally. Avoid FOMO. Never chase pumps. Use money you can afford to lose. Study every project carefully. This mindset will protect you more than any technical strategy. A roadmap for the future. 1. Understand the foundation. Before investing, learn how blockchain works. Understand tokenomics. Examine white papers. Evaluate teams. Measure utility. Practice secure key management. Education is your strongest asset. 2. Think long-term. Warren Buffett's philosophy remains true even in digital markets. Focus on long-term value, not short-term excitement. The greatest digital wealth will come from holding strong assets, understanding cycles, ignoring noise, letting time do the heavy lifting. Crypto has 4-year cycles. Technology has 10-year cycles. Build your strategy around them. 3. Study patterns, just like Ray Dalio. Dalio teaches that every market moves in cycles. Every economy moves in long-term arcs. And every shift creates winners and losers. Crypto cycles, AI adoption curves, Metaverse growth patterns. These are predictable if you understand the underlying forces. The future of wealth. 1. Digital assets will dominate. In the next 10 to 20 years, tokenization will become the global standard. AI assets will become common income generators. Virtual economies will rival real-world economies. Crypto will coexist with national currencies. The wealth of the future will be created and stored digitally. 2. Ownership will be redefined. Ownership will no longer be physical, location-based, centralized. Ownership will be digital, portable, encrypted, globally accessible, instantly transferable. This is a revolution in the concept of property. 3. Gen Z will lead the transformation. The younger generation understands technology intuitively, embraces decentralization, seeks freedom, mobility, and opportunity, adapts quickly, and learns even faster. They will shape the next wave of global wealth. Conclusion. Ladies and gentlemen, let me leave you with this. We are standing at the edge of the most transformative financial revolution since the invention of the Internet. Next-generation assets are not a trend. They are a new financial era. If you understand them, if you prepare for them, if you adopt them wisely, you are not just investing in an asset. You are investing in the future of value itself. And that future is already here. Thank you.